Today I'm going to teach you exactly how to trade the fundamentals, the news announcements in a correct way. My focus on this video is going to be on the XAUUSD, the gold spot, because it's the one I made more profits on when I was trading the Core CPI. Today it was a Core CPI day, and my focus was mainly on the XAUUSD. Even though I took some trades on other instruments, my focus was mainly on the XAUUSD. Actually, this is part 1 of the series of trading the news announcements on how to trade the fundamentals in a correct way. Right, now in part 1, we are going to cover the Core CPI today. Before we can get to the daily price chart, we need to start here from the PDF to get some rules and move on. Now, I'm not going to get into what is Core CPI and what it measures, but the part that is so important that you need to understand it is to do the comparison between the current data versus the previous data. Now, if the current data came out greater than the previous data, you are going to see the dollar being positive. Then if the current data is less than the previous data, the dollar will be negative. Now, where do you get all this data and how to see it and how to interpret it and how to trade with this current data that has been released? You are going to get all that type of data here on investing.com. This is an actual and this is the previous. Now, the current data came out and it was 3.8%, and then the previous data was 3.3%. So you can see that the current data came out greater than the previous data. Therefore, you're going to see the dollar being positive. This is going to support the dollar as positive. Now, how are we going to trade this thing? When to enter and how to enter? Right. Firstly, don't try to use this information to enter into the market exactly at the news announcement time, because that is where most people get it wrong. That is the biggest mistake most people are making. You find people waiting to take trades as soon as the news is being released. How can you enter into the market without proper data, without having to look at the data? Don't do that. That you're gambling in the market. Instead, do this. Now, I'm going to make use of the XAUUSD right here. The XAUUSD, as you know it has the dollar as a quote. So that means since the dollar is positive here, we are going to see the XAUUSD drop. Now, how I wanted to see the XAUUSD drop, there are two ways of entering into the market with this type of information. Now, two variations. Number one, I want to see the market open at the news announcement time and manipulate, meaning it have to move in the opposite direction to push me and take me into a trade. Sometimes this movement can be fast, sometimes it can be slow. Right, then after that I want to see the market drop all the way to the downside. And then the second way of entering, I want to see the market at the news announcement time open and then drop as per news announcements. But then after that, I want to see it retraces back. Then around where I was supposed to enter from, I want to see it drop all the way to the downside. Because now the idea it is to move in line with the aftermarket, after the news announcement, not during the news announcement time. During the news announcement time, it is dangerous to try and enter into the market from there, because you don't have the data. You don't have like the valuable data from there that will back up your decision that you're going to make, whether you are buying or selling. Don't trust only the technical analysis when it comes to the news announcement, but instead trust the data release. Right, let's get into it on the real price chart and show you exactly how I traded the XAUUSD and other instruments. Now we are here on the first example on the XAUUSD of the trades that I took on the Core CPI. Right, first one is XAUUSD. Now, what I'm looking for right here, since you already found that the data told us that the dollar is going to be positive, or found out the dollar is positive. So by these two variations, as I mentioned, open, rise, drop, or open, drop, retrace, and then drop. Two variations. Now let's see. Right, now as you can see, the market opened, rose to the upside. Now I want to see the market drop, and this is how I'm going to construct a short position here. Now I can jump in right here Put the stop loss few pips above some swings there to protect my capital. As you can see, the market didn't hesitate and it didn't disappoint. The market simply opened, rise, drop all the way to the downside because the data came out positive for the dollar, that it is dropping everything that is a dollar as a quote, and it will be buying everything that is a dollar in it as a base. Let's move on to the second example so you can see exactly how to apply this thing. This is the second example of trade that I took on the Core CPI day. We have the Euro USD. Still the same procedure since the data came out positive, told us that the dollar is going to be positive. Here, open, rise and drop, or open, drop, retrace and then enter, jumping into a trade. That's what we wanted to see. Now let's see. Now as you can see, the market opened and rise. Now I can start to enter into the market right here. As you know, the first TP will always be at 1:2 risk-reward ratio. 1:2 risk-reward ratio, the first TP, no matter what. Now let's play and see what we have. As you can see, the market turned this 1:2 risk-reward ratio TP as nothing, because that's what happens when you are trading in line with the market from them. People who entered right here at 2:30, they didn't get nothing. They got nothing because that's what the news announcement in nowadays are. News announcements are no longer volatile, just like they used to be back in the days. So there's no point and no need to chase the news announcement time. It is no point to try and chase the market around there. Now this is the USD CHF. Bear in mind, I didn't take a trade on this one. But it's just to show you exactly that you still apply almost the same thing even on an instrument that has a dollar as a base in this case. So since now the dollar here is a base, this is how I want to see it. I want to see now the market open, drop, and then rise. The entry is going to be down there. Or I want to see it open, rise as per news announcement, then retrace back down. The entry is going to be down there with an intention of rising, because the idea is that the dollar is positive, so the dollar have to go up. Now as you can see, the market opened, drop. What are you going to do? Take this thing. Now you can start to jump into your trade right here. Put the stop loss few pips below there. Okay, it's not safe. Just like that. Yeah. And then after that, the stop loss, so the take profits, always 1:2 risk-reward ratio. The first take profits, 1:2 risk-reward ratio. Now let's see. As you can see, the market didn't hesitate. The market opened, dropped a bit, and then continued all the way to the upside. Do not try the thing. I keep on saying this. Do not try to enter into the market at the news announcement time. It is not safe. Take a look at this whipsaw. If you bought right here, when you thought you're enjoying that profit right there, few seconds, boom, the market is down. And if you sold exactly right here, this pin going up, you wasn't gonna survive that.